Cap Epicenter and AGORACOM TV, a daily, fast-paced, edgy show bringing the best press release out of the small cap space every morning at the open, so you can hopefully profit from them and maybe find your next great small cap investments. Tuesday, January the 18th, I've got 3 press releases for you, both sides of the border, Canada and U.S. First up, Apogee Minerals trades on the TSX Venture Exchange under the stock symbol APE. They announced that they intersected 21 meters grading. Listen to this. 479 grams ton of silver. These are results from 6 additional diamond drill holes at their Pulacayo deposit located in southwest Bolivia. Here are some of the highlights. Hole 159, which is the highlight hole. I told you had that 479 grams silver, but it also had 0.41% lead, 0.58% zinc, and that was within the 34-meter interval grading 343 grams ton of silver, 0.41% lead, 0.54% zinc. Nice numbers. Also on the highlight reel, hole 156, 6.4 meters, 217.5 grams ton of silver, 0.99% lead, let's call that 1%, 1.3% zinc, and finally hole 158, 5 meters, 172 grams ton of silver, 0.64% lead, 0.59% zinc. Really nice numbers here. Apogee has been a company that's been around for quite a while. In fact, they used to be clients of ours. We used to own shares in the company. Great company. Nice to see it finding itself back on its feet. Why? Look at the 52 trading range. 5 cents on the low, 34 cents on the high. Where to close yesterday? 34 cents. That's great news. A little bit about the company so you know what they do. They target advanced silver, zinc, lead project in South America. They've always done that. I like that geographical focus. Projects that demonstrate potential to be developed into production. Right now, the projects are located in historic silver-producing regions of southwest Bolivia and northwest and northern Chile. So great news for Scott Patterson and his team over at Apogee Minerals. I'm going to be taking a closer look. It's probably worth you taking a closer look as well. Switching over to the U.S. side of things. Liberator Medical trades on the OTC under LBMH. Listen to these numbers. They announced that they've recorded a record annual net revenues of $40.9 million. I'm going to call that $41 million. That's an increase of $15 million in change, or 58.5%. They're saying it's primarily due to the company's continued emphasis on direct response advertising campaigns. Their direct response advertising expenditures actually went up $6.6 million, or 158%, to $10.8 million. I think that's okay when you can generate $41 million in revenue, as long as you got a decent gross profit to go with it. For the fourth quarter, they brought in about $11.5 million in revenue. So if you extrapolate that out, which is probably why they're giving us this number, they look like they're on an annualized pace to get to about $48 million next year. So that may be why they're telling us that number. Gross profit for 2010 increased by $9.8 million, or 58.5%, to $26.5 million. That was the gross profit number. On top of it, I love this. Cash, $7.4 million at the end of the fiscal year, which is September 30th. That compares to $3.8 million last year, so they practically doubled their cash. That's great, because you need small caps that are spinning off cash, and that's a really great sign. The company specializes in direct-to-consumer quality medical supplies to Medicare-eligible seniors. That's got to be a great space going forward, so definitely worth taking a look at. Closed yesterday, $1.20. Not too great of a performance on the 52-week range. $2.44 on the high, $1.06 on the low. That doesn't mean a whole lot until you do your own due diligence, find out why. And in fact, it just may be a great buying opportunity given these annual numbers. But do your own due diligence. And finally, CHDT Corporation, trading on the stock of CHDO. They reported they're saying a record $2.6 million year-end order backlog. They're focused on consumer products for the North American retail market, and this is a record backlog for shipment in the first quarter. I like that because they say that that's going to give them a strong start to the first quarter, which traditionally is one of their slowest. Last year, in the first quarter, looks like they lost $508,000 on sales of just $353,000. So given these numbers here, they say they're poised for a major turnaround. A little bit about the company. They were recognized with awards last March, they say, at the International Home and Houseware Show for its new lighting devices. A bit of digging went quickly into the background. Why? Because they're trading sub-penny, and I always got to check these things out. Even on the surface, you got to do your deep due diligence. But Q3 revenue, they reported over $3 million and profitable, and they say that they've done a total of over $10 million since 2008, and it looks like that's accelerating. So we may be looking at a growth company here. Like I said, trade sub-penny, and I'm not crazy about the fact that they got 650 million shares outstanding. I don't like that. I wish a company like this that's finally delivering some great revenues and some great numbers just does a massive reverse, 30 for 1, bring it down to 20 million shares, bring the stock price up to 20 cents or so, and then let investors have a better shot at trading this thing fairly. Nonetheless, good numbers. Maybe they're contemplating that right now. Go take a closer look. That's a wrap. As always, quality over quantity. If you're not watching this on AGORACOM right now, get to the front page. Watch this show or previous shows via YouTube, iTunes, or your preferred video partner. Take a look at the best headlines coming out of the small cap space over the past few days, and finally get yourself in the directory to check out some great companies, succinct descriptions of each, and you can filter the list by industry and exchange to find the one that best suits your portfolio. That's a wrap. Have a great day. See you tomorrow.